So I think some investors, particularly in North America, have concerns about Europe, you'd have to say, and I think particularly the currency risk when looking at the Eurozone particularly. I think Rob Lucas made a good point when he was on the panel on Tuesday that actually, I mean, Europe isn't a homogeneous zone. It's of different regions with different currencies and different aspects to it. So, you know, I think whilst there are concerns about Europe, I think in the main investors understand that actually within Europe there are definitely opportunities that are available to investors at the moment, provided you pick carefully. So the first one always has to be returns. So you know, most investors would do a very detailed review of track record of the team, track record of individual assets, and probably the consistency of returns that the team's had over recent times. I think the second thing you look at is continuity of the team. So if you've had a manager where there's been a lot of change in the investment team, that's probably a difficult thing to accommodate. And then probably finally it's trying to understand what is their investment thesis and why potentially it's different from other investors and why it's likely to win in the current environment. So as they generally say in the small print, often, you know, the fact that an investor's made great returns in the past doesn't necessarily mean they'll make good returns in the future. Well, we've adopted a strategy geographically where we broadly said we look at the beer drinking countries rather than the wine tasting countries. So that for us means we're generally going for countries with stronger GDP growth and probably a legal structure where it's easier for an investor to look at making fresh investments in companies. That's not to say we wouldn't look at other parts of Europe, but we tend to look in other geographies at companies that actually have a base there but do quite a lot of pan-European or international activities. Teacher's strategy is very much to help businesses internationalize, so we're looking for companies in Europe that will be looking to grow into Asia, Latin America and North America if they're not there already, and we can help them do that with our long-term flexible capital but also with the network of connections we have. I think you mentioned primary there. I mean, I think there is a debate running about the mix between primary and secondary investing. You know, there's clearly going to be opportunities to make secondary investments in and around Europe. That has the attraction of getting slightly quicker to the exit and rewards for investors. I think personally the teacher's style is to look at growing companies where we can help them with a primary investment to really achieve their long-term ambition. Because we have very long-term capital, we're probably a little less prone to short-term fluctuations in the market. So, you know, we can invest in a business, hold it on a long-term basis and make great returns for ourselves and for management teams in those businesses.